Hi guys, we'll go ahead and get started. Appreciate everybody hopping on tonight. We'll try to make this as quick as possible. I think we can knock it out 45 minutes, maybe an hour. Hopefully whet everybody's palate to the short-term rental business. Real quick about me, guys. I've been doing short-term rentals for a little over 2 years now. So I feel like when I say that, it sounds kind of cocky, like, great, I've done this 2 years. Let me show everybody how to do it and why we do it better than everybody else. So no, it's just been a series. My background is in engineering, so I'm definitely a big systems guy. And it's just been a series of try something, it doesn't work, try something else, it doesn't work. And then it's gradually turned into this business that's pretty easy to run, it doesn't require a lot of time. It's pretty passive. And so I'm just going to share what I've done, and hopefully it'll be helpful for you, whether you're looking to buy your first or second or fifth short-term rental, whatever it is. So we'll cover some information, and then I'm going to go through, some of my numbers as well, like directly on my websites and stuff like that, guys. So just know when we get to that, that's not nothing I show you is supposed to be like a flex or look how great I am. I just want to give you an idea of what's available and what the opportunities that I think are still very much available in this market for people that want to get into the short-term rental game. Also, let me give a quick shout out to Donna and Reagan and Katerina. They're here. They promised me I wouldn't put them on camera, so I'm not going to turn the camera around for you to see them, but they're the ones that put all this together for you. It's probably how you heard about the meeting. So thanks to them, and they can certainly help you. We're going to talk specifically about getting short-term rentals here in the Orange Beach, Gulf Shores, Pensacola, Florida area, and they can certainly help you out with that. And I would definitely recommend giving them a shout when you're looking at making an offer on a property. So we'll jump in. As I'm going through this, guys, I want to make sure you're getting the information you need. So any questions that you have, you can always, I think everybody's got the ability to unmute themselves. You can just hold down space bar and you can ask the question, or you can type it in the chat box. We'll try to monitor the chat box as well as we go through this. And I am going to pull up some slides real quick and share my screen. So give me just a second here. And I normally have multiple screens, so. All right. So can everybody see the secrets to success with short-term renters slide on your screen right now? Look good?
Yep.
All right, cool. All right, so getting through this, guys, a couple things real quick about me. I'm a loan officer with Homestar Financial. I've been in the mortgage business over 16 years. Mentioned before, I have an engineering degree from Georgia Tech. I'm married. I have 3 handsome little boys at home. And that's basically my life in a slide. That takes up all my time between work and kids and family. My background, I've managed a hard money lending company. I've flipped multiple houses. I've owned several long-term rentals. But for my money, for everything that I've done from an investment standpoint, I'm a huge fan of the Airbnb game and of short-term rentals. There's this quote by Warren Buffett I love. It says, "Until you find a way to make money when you sleep, you'll work until you die." And for me, short-term rentals is that business. It's that way that I make money, and make money while I'm sleeping. So the goals for the day, we're going to talk real quickly about, real estate in today's market, like why I think real estate's still a great thing to invest in, why I'm actually still looking to buy some additional pieces of real estate this year. We'll talk about some acquisition strategies and how to, what to think of as far as acquiring a property. Selecting a market, we're not going to cover that a whole lot because I think people that go through that exercise, they'll realize real quick the market we're talking about today here on the Gulf Coast is very, very lucrative, and there's great opportunities here. We'll also talk about advertising strategies to maximize profit, and then how to handle some of the day-to-day management of owning these short-term rentals. And it should give you the tools and information you need to purchase your first or second or third or 15th short-term rental. And hopefully we can show you how to structure a business that'll help you make money while you're asleep. That's the whole point, is to not have another job or another full-time job, but to have this business basically run itself, and you are involved, but not having to be involved, 35, 40 hours a week like you would with a normal job. So when I say why invest in this market, talking about the market in general, we're talking about real estate in general, okay? And some common objections I get from people is, well, aren't we headed for a recession? There really aren't any good deals. Prices are too high. I'll wait and buy a foreclosure when all the foreclosures hit. Have you seen how high interest rates are? Aren't we headed for another crash? These are just some real common things that I hear from people as far as looking at buying a house, whether it's an investment property, primary residence, whatever it is. And what I want to cover, guys, is I want to cover, what's happened in the market to get us to where we're at now and kind of where I expect the market to head in the future. And like I said, I'll give you some data and let's take a look at it. So the first slide that I have up here, I think we all understand, or we need to understand, that mortgage rates have definitely gone up, and mortgage rates going up has certainly slowed the real estate market. But understand that mortgage rates are driven by inflation. It's not driven by the Fed raising rates. Okay. We fully expect the Fed to raise interest rates probably another 3/4 of a point this year. That'll start at their meeting here on February 1st. There's kind of a toss up between will they raise rates 1/4 of a point or a 1/2 a point. But we fully expect the Fed to continue raising rates. However, the whole reason the Fed is raising rates is to slow down the economy, slow down the money supply, and bring inflation back under control. Now, on this slide right here, the reason rates have jumped up so quickly and on the mortgage side, as you can see, starting back in the beginning of 2020, we all remember that, the shutdown and coronavirus and the start of the pandemic, the Fed started doing what's called quantitative easing. That's QE. That's basically where the Fed was subsidizing mortgage interest rates. Okay. And what happened is inflation was low because economies were shut down. The Fed was doing everything they could to stimulate the economy. But come middle, about spring of 2021, inflation started to tick up. But you'll see, even though inflation started to tick up, instead of the Fed fighting and staving off that inflation, they continued to drive the economy with artificially low rates. And that led to the market that we're in right now, where rates shot up. I don't think in history we've ever seen mortgage rates double in a year. And we saw that last year with rates going from around 3% to well over 6%, sometimes as high as 7%. And so that's the inflation has caused the mortgage rates to jump up that high. Now we've started to see signs that inflation is coming back under control. And that is also coinciding with mortgage rates coming down a little bit. So now let's see if we can get the slide to move forward. So when we talk about inflation, when will it peak? I personally think we've already peaked on inflation. I think inflation will continue to come down. And as it does, mortgage rates come down. What I want to show you on this slide is when we run an inflation number, the way it works is you have monthly numbers, and then we sum up 12 months worth of these monthly numbers to get the inflation rate. So currently, core consumer price index or core inflation is at 6%. But if you look at this slide, what's happening is when you get into, so the number here, and my screen's actually in the way, let's move it over. So the number here of November being 0.2%, that number replaced last year's November number of 0.5%. Make sense? October's number, the most recent one of 0.3%, replaced last year's October number of 0.6%. So what I want you to see from that is we're running lower core inflation numbers now, 0.3, 0.2. The hope is those numbers will continue to come in 0.2, 0.3, 0.1 for the next several months. And we're going to be replacing numbers in December, January, February, March, April, May, June. We have several months of big inflation numbers that we're going to be replacing with hopefully smaller inflation numbers. As that works its way through the economy, and the reason these inflation numbers are coming in lower is because we're finally seeing the Fed interest rate hikes cycle their way through the economy. It doesn't happen instantly. It takes several months for that to funnel through. And personally, I think the Fed's probably going to raise rates too high, and that's going to cause the inflation to really slow way down. But that's always good for mortgage rates. Well, as mortgage rates come down, I fully expect to see home prices not only be supported, but probably go up. I'm actually predicting, with all the different sites and things that we read and the things that we look at economically, I'm thinking home prices nationally will increase somewhere, probably low digit appreciation, 3 to 5% this year. But it's all will be because, if you think about it, last year, home prices really increased as much as they did in 2021. The difference is people are paying just as much as they did. They're just now paying more of that money in interest and higher interest rates than they're paying with home prices with home appreciation, if that makes sense. So another thing that I think is really going to help rates is historically the spread between a 30-year mortgage rate and a 10-year treasury is about 175 to 200 basis points. It's basically a 2% difference. And right now we're running a 3% difference. There's lots of reasons for this. It has to do with servicing value of mortgages, but basically what's happening is mortgage rates are artificially high right now because investors, long-term investors, expect rates to come down, and they know anyone that closes a loan at 7%, when rates go down to 5.5% or 5%, they're all going to refinance. So that effectively makes a 7% rate mortgage now more expensive than it would normally be. So lots of, and we can go into more detail with this later at the end of this if anybody has specific questions, but just understand the take-home message is we fully expect interest rates to come down. And as they do, I think that'll be helpful for home prices to remain steady and continue increasing up. It'll also make it tougher to get a home under contract, because if we could snap our fingers and have 5 or 5.5% interest rates right now, the homes that are on the market would probably not be there by this weekend. So that's where we're headed. It's a great time to be in a market to buy because there is a little bit of inventory. You can negotiate. When rates get lower, I think that opportunity is going to dry up, and I think it'll dry up pretty quickly. So when it comes down to it, why should we invest in this market? Well, the other piece I wanted to hit on real quick, guys, and then we'll get into the short-term rental stuff here. So interest rates certainly had a big driving effect on home prices over the last couple of years, and the government created artificially low rates. But there's another dynamic at play that I want to point out real quickly. And the Fed Reserve, they did a study on remote work. So you can imagine during the pandemic, that's been one of the biggest changes or biggest upheavals in how we work, how we as Americans work, that we've seen in years. Some people are going to call it the remote work revolution, just like we used to talk about the industrial revolution and things like that. We really are changing how we work. And you can see people who worked remotely, work from home was a really small percentage until the pandemic. Everybody who could work from home for a minute, obviously some people have gone back to the office, but it's silly to think that people would, everybody's going to go back to the office like they did prior to the pandemic. And on this second chart right here, what this study did, you've got a green line, a red line, and a blue line. And what the Fed did, the researchers, is they determined that markets that were more conducive to remote work, like for instance, cities where they had lots of technical jobs that could be performed both at home or at work, it didn't really matter where you were at, versus cities that had more of a, say, an industrial footprint where you have to go into the factory to work on the car, you have to go into a restaurant to work. The cities that were more conducive to remote work saw higher home price increases than cities that were not conducive to remote work. And the reason for that is that because more people are working from home, that creates more demand for real estate at home and less demand for commercial property, for office space. So what you've had is a shift of value in a lot of cities from commercial property to residential property. And what the Fed ultimately concluded, and I'm not going to read you this entire paragraph in their conclusion, but the bold part here in the middle is that the transition to remote work was directly responsible for 15 points of national housing price growth since November of 2019. So since the pandemic, over half of the home price increases we've seen have been driven just by the fact that more people are working from home. There's more demand for space at home because you have an office space at home, you have kids you are teaching at home, and you have less demand for typical commercial office space. So I think that is, I'll talk to some people and they'll say, well, just the fact that home prices have gone up so high in a short period of time, there has to be a correction or these home prices have to come down. Guys, I don't see it in the data, and I think there's other things that work more than just artificially low 2.5% interest rates that's driven it. So I really think that real estate is fundamentally strong. Even with rates being high, we don't have tons of inventory in this market, or really any market that I'm familiar with that I do business in. We got to remember, even though rates are high, loans can be refinanced when more favorable rates become available. And with real estate, we can generate a passive income stream where we can make money while we're asleep. All right. So guys, if you have any questions on that or just general information about real estate at all, I'm always happy to cover it. But I just want you to know that I'm a firm believer that real estate is it's solid. It's a great foundation to build you and your children's wealth on moving forward. So let's get into it now. Let's talk about how to get into the short-term rental game. So when we talk about acquiring any property, we always have to have, an acquisition strategy and have an idea of what it's going to cost to get into a property. I always split this up into two categories. I call it the traditional category and then more of a creative category to get into properties. Let's hit the first one real quick. So traditional, obviously, for someone looking to buy any investment property, cash is always king. I've had people talk about liquidating some investments, moving money from stock markets, people who are moving from long-term rentals to short-term rentals. So they'll do 1031 exchanges. I've had people get an inheritance. They've got to invest it, figure out what they're going to do to make this money grow. So obviously, if you can pay cash for one of these things, you're always going to get the best negotiation, the best opportunity to pay cash. But let's be honest, there's not a lot of people with $500,000 or $1 million of cash just sitting around looking for an investment home. So a lot of people turn to a traditional mortgage. And when we're buying a short-term rental, obviously, you're not going to live in this home permanently. So it's either going to be a second home or an investment property. If we're doing second home financing, traditional guidelines, it's a minimum of 10% down. Second homes are nice because they do allow for lots of seller paid closing costs. In this market, a lot of times we can negotiate for seller paid closing costs, maybe get that seller to buy down the interest rate or at least get some of the cash out of pocket costs down a little bit. To get approved for second home financing, the home typically needs to be located in a vacation or a resort type area. Gulf Shores and Orange Beach is definitely a vacation or resort type area. And if you don't think so, you should visit here right now in January versus coming down in July. And you'll realize real quickly that, oh yeah, people like to go to the beach in the summer for vacation. The key with a second home to qualify for it is you have to qualify for the entire monthly payment. Even if you expect to rent out this property and make a bunch of money, we cannot use the expected rental income to offset the payment. Customers have to qualify with their other jobs or other income to do second home financing. If we go in the investment property route, it does require a minimum of 15% down, but I highly recommend at least 20% down, and really preferably 25% down, because with 25% down, you get better interest rates, and it's just overall the financing becomes a lot cheaper to do it that way. Seller concessions are maxed out at 2%. So there is that hiccup right there. If we're trying to negotiate a bunch of closing costs to keep cash to close down, well, we're limited to 2% if we're going the investment property route. Any home will work. It doesn't necessarily have to be located in a resort area. But the beauty of investment financing, and why we do this for most people, is we can use expected rental income to offset the mortgage payment. So for most customers, as long as they make enough money to qualify for their current outgo, house payment, car payment, credit cards, the home that they buy should be net neutral or income neutral. So the income piece is not the limiting factor. The limiting factor becomes more of the just the amount of money down. Do I have enough cash on hand to do 15, 20, 25% down? Quick note on second homes. Back when I started teaching this information, another reason to call a property a second home is because you could get a much better interest rate on second homes than you could on an investment property. But about a year ago, Fannie Mae and Freddie Mac changed their rules, and instead of classifying second homes and the rates that you get on a second home equivalent to what is basically a primary residence, they now consider it an investment property. So there's really not an interest rate advantage for going second home versus investment. The only reason we would go second home from a financing standpoint is if we wanted to do 10% down instead of more, and if we wanted to negotiate and get more seller paid closing costs. Something else to just be cognizant of, and this market is definitely riddled with condos, and I highly recommend investing in condos. I own 4 condos down here in the Orange Beach Gulf Shores area. You have to be careful. There's a difference in traditional lending between a condominium and what we call a condotel, or a non-warrantable condo. Condominiums have traditional financing options available. Condotels are not going to go through a standard conventional loan, a Fannie Mae or Freddie Mac loan. They have to be financed through more of a non-traditional, what we call a non-QM financing. That typically will start with a minimum of 20% down to even think about getting into a condotel. And typically the rates on those start somewhere around 8.5%, 9% in this market. Because the financing is harder to come by on condotels, typically a condotel complex, if you're comparing apples to apples, will be priced lower than a neighboring condominium that you can get traditional financing on. The reason it's cheaper is because the market is the market and it does what it does. And if you can only finance these properties at 9%, well, obviously they're going to be less expensive than the homes down the street that you can finance at 7%.
Did you see Rachel Ward's question?
How do you know the difference between the two? Rachel, so good question. That leads me to my next slide. Or let's see, we'll get to it slide. But the biggest thing I tell people is make sure you have a relationship with good real estate agents in the area. And I know the girls I'm sitting here looking at here in this room certainly know of properties that are financeable, know of properties that are not financeable or challenging. At the end of the day, the only way to know for sure is to get a home under contract and us to get and review all the condo docs. But that's certainly beyond the scope of this class today to explain all that. And I promise once we got about a third of the way through it, everybody would be asleep and logging off, because it's not fun. Leave that up to the professionals, but just understand that just because you see a good deal on a condo, look at it, let's do our due diligence, let's run numbers, but that's something else we have to watch out for, in addition to how much can it rent out for, and can I find someone to clean it, and how are we going to manage it, and all the other stuff we'll cover here in a couple slides. So if you guys, getting a cost estimate for a traditional mortgage is as simple as getting pre-qualified. We just take a standard loan application. That's what I do for a living. That's what puts food on the table for me and my family. So you can give me and my team a call. That number's here on your screen. It's also conveniently mentioned at the bottom of every slide on this presentation. But yeah, if you have any questions at all, just give me a shout. We're happy to run numbers for you. I'm getting into one of these. If we want to do more of creative acquisition of some of these assets, there is non-traditional financing available, whether it's bank statement loans or DSCR loans. DSCR stands for debt service coverage ratio loans. This is a great option for people who maybe are self-employed that don't show a lot of income. Maybe if you're like, a rock star real estate agent, like some in this room here that I'm talking to, and you make, millions of dollars a year, but you have a great tax accountant and they write it all out. They're all smirking and looking at me like I'm a bad guy. So, but you have a great tax guy and he writes everything down, and on paper, you make $1 a year, you're going to have trouble qualifying for a traditional mortgage. Well, DSCR fits that hole for those types of customers. Okay. So the idea is that you qualify for the loan by itself, or for the property by itself on the expected cash flow. And we're not worried about what income you have, what your car payment is, what your mortgage payment is. We don't even look at that. You qualify for the loan by itself. The problem with DSCR loans is they're always going to be, any type of financing that we talk about under this creative acquisition slide, guys, is always going to be more expensive than the traditional financing options that are out there. So just know that and be aware of it. There's other strategies you can use. Maybe you find a private investor, someone who can buy the property, but you just work out a split for running the property and managing the short-term rental for that investor. Owner financing, there's not a lot of that. There wasn't a lot of that the past couple of years, but as people get kind of, I think, knocked up or intoxicated on what they think they can get for some of these properties down here, and they realize they're not going to get it through a traditional means, yeah, you may have to pay more for the property. But if you're able to secure owner financing on the property and they're willing to do that for you, that may be an opportunity to get into a home, and then you don't have to worry about going through traditional qualification. become a property manager, call around and see if you can manage and take over for someone. I'm sure there's rules and licensing, and I don't pretend to know all that, but there's certainly some opportunity there. Rent arbitrage, I always put that on these slides. Real quickly, guys, how that works is that you would find someone who's interested. You would sign a long-term, maybe a 12-month lease on one of these units at $4,000 or $5,000 or $6,000 a month or whatever it is. And then it's up to you then to sublease the property on Airbnb and VRBO, make it turn a profit, and then keep the profits that way. And maybe use that to build up your assets to then go buy your own. So there's lots of ways to get into this game. Understand that, there's a lot of people who have cash and money on hand that they're trying to invest to earn a return on. This is a great way to do it. There's people who want to get into real estate, but they don't know how to do it because they don't have a ton of cash. Well, if you're a hustler, I've seen people get into the game, doing something like this, and there's opportunity, and there's enough. I guess it's lucrative enough that it allows for opportunities like that. Do understand if you're going to acquire a property through a non-traditional method, it's very reasonable to expect less cash flow than what you would get through a traditional financing option. I would tell you from a safety standpoint, just be sure to be very clear in your agreements, percentage ownerships, and try to have an exit strategy to get out of one of these methods, whether it's built in for owner financing, how you can deed the property back to the owner or work out something with a private investor. Just understand you have to do your due diligence on that. When we talk about selecting a market and a property, just some things I want to highlight for you real quickly and why I like this market and why I own so many properties in this market. Local municipal support cannot be overstated enough when we're talking about short-term rentals. Hotels, I mean, there's names that everybody on this in this meeting have heard of, Hilton and Sheridan, all these big hotel chains and companies. Well, those people, they made a lot of money doing kind of what we do in the short-term rental game, and they don't like people stepping on their space in some of these cities. So I'm personally from Atlanta. I know Atlanta just passed a rule last year that said that you could only own 2 short-term rentals in the city of Atlanta, and you could rent out the house that you live in. That was one. And then if you rented out the house that you lived in, you could own one more in the city, and that was it. So basically, just with one, stroke of the pen, wiped out the short-term rental opportunities in the Atlanta market. We're seeing stuff like that all over some of these cities that have always been dominated by the hotel chains, whether it's Lake Tahoe or Nashville. Biloxi is real tricky because there's a big casino down there with a hotel, and they have very deep pockets because they're a casino, and they don't like people stepping on their hotel income for people that go and visit the casino. So just local municipal support is huge. The beauty of more of your traditional vacation markets, Gulf Shores, Daytona Beach, places like that, is the entire economy revolves around the people that come in and travel and vacation to these places, right? So the local government people, they understand that they have to welcome the visitors and have to welcome the people. There's not enough hotels here in Gulf Shores to get anywhere near supplying the demand for people that want to come and vacation down here in the summer. So I love that aspect of it. I love that the local community is going to work with the owners and the people and some of the problems and headaches that come with the traffic and the congestion and things that people might complain about. So that is a huge thing that I love about this market. And there's a theme here, whether we're talking about condotels or investing in general. Work with local real estate agents that can give you an idea of what to expect, what the local climate is for short-term rentals. Also, pay attention if you buy in a community that has HOAs, whether it's a condo. All condos will have HOAs, but most subdivisions do as well. Make sure there's not any HOA rules that outlaw or prohibit short-term rentals. I know I've talked to some people. They came to me and they were all excited. They're like, "Oh man, I bought this home, and yeah, the HOA said I couldn't do it, but I went ahead and put it on Airbnb anyway, and I'm making all this money." And then that's all fine until the HOA finds out about it and starts fining them. And, I don't think you're getting in this business to have a lawsuit. You're probably getting in this business to make money. So, let's do it legally right up front. Okay. It sounds silly to say, but I've had to coach people out of not doing that. So let's not do that. Okay. Anyway, moving along, lots of other tools, lots of reasons, and I'll actually pull up a website for you here in a minute that I think can be really helpful for trying to project what specific property to pick. And actually, you know what? I'm going to end the slides and we're going to make this more interactive. So let's go ahead and do that. Can everybody see a screen? Can y'all see the Chrome? Okay. So guys, the website I'm going to go to that I'm actually on right now, but we'll start at the beginning, is AirDNA, and it's .co. That's not a typo. It's not .com. It's .co. And you can get a login for here. It's very free, so that's hard to beat. And on this website, let me shrink that down. Over here on the left-hand side, you can go to this tool right here called a rentalizer, and they offer that. This is, again, it's totally free. And what I'm going to do, so I actually own 2 condos at a complex down here in Gulf Shores called Seawin. So everything that I do, I'm going to show you my numbers. I'm going to show you everything. Assuming you wanted to buy a condo in Seawin, obviously it will apply to other places or other units up and down the beach here. But the address for Seawin is 401 East Beach Boulevard here in Gulf Shores. So you can type that address here in the rentalizer, and it gives us a number. It says, okay, well, actual expected annual revenue is about $64,000 a year. Not bad, but if you know Seawin, and again, if you're working with a local agent that can point you the right direction, there really aren't any 2-bedroom, 1-bath units in Seawin. They're all going to be advertised as 2-bedroom, 2-bath units when they're for sale, but they're really 3-bedroom, 2-bath units. The 3rd bedroom, they call it like an office or a nook. I don't know what they call that thing, but everybody uses it as a bedroom. That's what it is. So it'll end up sleeping, 6 to 8 guests. Well, when we correct for that on AirDNA, we can update it. And now instead of $64,000 a year, it jumps up to $87,000 a year in expected revenue. Pretty good tool to use. It's not 100% accurate, and I'm actually going to show you my numbers and show you where I think it gets the numbers wrong, but it's a pretty good tool. The other reason that I like the tool is if you go down here and click this Edit Details button, you don't have to have some big sophisticated spreadsheet to figure everything out. You can plug numbers in and change the numbers based off what you know. So what they're actually projecting here on AirDNA is about $87,000 of total gross rental revenue for the year. And from that, they start subtracting out things like management fees, lodging taxes, property taxes, things like that. Well, so it gets it wrong. I can tell you the lodging tax here in Gulf Shores is actually 15%, not 5%, but that'll update your spreadsheet accordingly. They also want you to figure out your own cleaning fee. So now we've got to start estimating, okay, well, how many people stayed here? But again, it's a starting point, it's a tool, and you can hop in right now and start plugging in numbers and seeing if it's something that, if it's a property that you're interested in purchasing or wanting to move forward with. Something that's totally missing from this, in case you didn't notice, I guess they're assuming everybody's paying cash for these properties. There's no mortgage payment in here. You see that? So, so again, not foolproof. It's definitely not the number. You're not going to plug in a property and be like, oh, look, I'm on net $50,000. Let's go buy it. There's more to it than that, but you can plug numbers in here and you can use this as a pretty good tool. Okay. So what I like about this as well is it's pretty specific to an area. So you can stay in Gulf Shores or stay in Orange Beach. So like I own a property at Blue Water, which is 24950 Perdido Beach Boulevard. And you can see that it will change the expected revenue based off the address, even though we're actually in the same market. Make sense? So I can plug that in. I think my Blue Water one technically sleeps 8. We can update it. And you can see I get a different number because it's pulling from the Airbnb data near Blue Water in Orange Beach versus pulling the Gulf Shores data near Seawin. Okay, so pretty good little tool. Again, I don't necessarily totally agree with these numbers, but it's a great starting point, and you can see it takes 3 seconds to type in the address and it costs absolutely nothing. Okay, now in order, so it's a starting point, but now what we want to do is I want to give you an idea of what, okay, this is some generic numbers they give you. I'm going to show you some of my numbers or some of the strategies I use to get to my numbers, and I'll show you my numbers, and then we'll go back and see based off the market. I'll actually run a live number for you for some listings that are on the market right now, and we'll see if it's something you'd be interested in pulling. And Rachel, by the way, I'm not sure if this is you or Jacob, but either way, I hope you guys are doing well. Yeah, my understanding is that AirDNA pulls data from both Airbnb and VRBO, but I think this Rentalizer tool just kind of branches out like a certain radius. I'm not sure how far it goes out with Airbnb data. And that's basically the data that it's pulling in that we're seeing when we run these numbers. Very cool. Well, hope you guys are doing well. Amy, I totally agree. And I'm actually going to show you my numbers that would agree with that statement totally. So let's see here, moving on. So let's say we find a property we're interested in. We're happy with the numbers. Again, I'm going to come back here at the end and show you my numbers for these specific properties. But so the next step in the process is, let's assume we've acquired it. Let's assume we're happy with our expected rate of return. And now it's time to start marketing this property. Okay, so we're marketing for or advertising for our short-term rentals. The websites we've already talked about, everybody should be familiar with those, certainly if you're on this call. We're talking about Airbnb and VRBO. And in my opinion, if you're not on Airbnb, you might as well not be in this business at all. It's kind of like having a website that doesn't show up on Google. It just doesn't matter. So Airbnb is where I get the majority of my bookings. I also get quite a few bookings from VRBO. I certainly recommend being on both. When it comes to advertising in general, some common sense things would be, and I'm not going to, y'all can probably see that just fine on the screen. Certainly having a direct website and posting on social media is important. Having the property listed, if it's free, sure, why not, on other random websites, TripAdvisor, Booking.com, etc. But common sense things on the listing, make the listing look good. If you look at your listing, is that a place you would click on? Is it a place you would work with real agents, tell people I'm personally not real good at. You could probably teach me, but something I do want to share that I think will actually be really, really helpful is you can see how well you're doing. There's out there called Rankbreeze. See that? What I'm going to do is I'm actually going to pull up my Rankbreeze account, and I've purposely not updated this recently because I want to do it live for you. So let's go to Rankbreeze, and I've got quite a few listings in here. But what I like about Rankbreeze is you can see here on the right hand side, it actually will tell you what page in the Airbnb search rankings you're showing up at. Okay, so like right here, this is a condo I own. It's at Belle Soleil. It's unit 1002. Thank you, Reagan. She helped us buy this one. And I'm actually on page 2 of the search rankings. Okay, well, something that I do and something that I recommend is not every day, but occasionally, 2 to 3 times a week, go into your listing and change something. Okay, update the title, change your pricing a little bit, do something to make the algorithm, the Airbnb or VRBO, be like, oh, something changed. And that I've just, in my experience, that seemed to have been helpful and effective staying on the front pages of the search rankings. So what I'll do, let's say on Belle Soleil, let's say I wanted to change the title. Okay. Well, what I would do is I pull up this. So this is my page here specifically for Belle Soleil. And I really like it because you can see here, this is where my search rankings have been. And as I make changes, I document it and keep up with it. And gradually those rankings have gone up and up and up. And I've certainly noticed I get more bookings as I'm closer to the top of the search rankings, right? It makes sense. But some tools that I really like on Rankbreeze, you can see here, it'll actually break down specific dates. So like if I went and searched in Gulf Shores for January 25th through January 29th for a guest count of 3, my listing shows up number 16 on the search rankings, and it's on page 1. Okay. If it's for 4 guests, it does better. It's number 9 on page 1. So you can actually see like a matrix of where you show up and where actually sleeps 9, just so you know. I've got a sleeper sofa in there, and I have a like a bunk bed that'll, it's a queen on the bottom and a twin on top, so it sleeps an odd number of people. But as I get to higher guest counts, my search rankings actually go down a little bit. Now I have some ideas for that, but I think what's happening here is you can see as the guest count goes lower, the average price. So what this is showing us is the average price that's charged for properties that are on the first page of the search rankings. So a unit that only sleeps 4 people, you can see here, is cheaper than a unit that, say, on average sleeps 6 people. Make sense? Because my price is cheaper, I think I actually end up higher on the lower guest counts and not as high on the higher guest counts, because Airbnb is in the business to make money, and they only make money. They make more money the more people spend on their platform, because they earn a percentage of that money. So that shows me that I might have some opportunity here to raise my price a little bit, maybe still stay on page 1. I'm just going to attract the 6 or 8 person guest crowd instead of the 2 or 4 person guest crowd. Does that make sense? So pretty good information, pretty specific. I really like that. Something else that I'll do is every time I make a change on my listing, I'll go here and actually track the change and do it. So let's say today I did go through, and I'm not going to do it now because we've got some other information to cover, but I could say, hey, I updated the title. Okay. I could type that in, save that, and I'm going to go through and delete it because obviously I did not update the title. But what that does is these little red lines that you see here, tomorrow, that red line is going to be on the screen, and I can see how that change actually affected my search rankings. If I don't like what it did, I can delete it. If I do like what it did, I can keep making that change. Make sense? So pretty good way to manage it, keep up with it. I'm going to go through and delete this one real quick since I didn't update the title and I don't screw up my data. But I think that goes a long way and hopefully can be a good tool for people to really, the whole point is, if we're going to do this, let's optimize the numbers, right? Let's see what we can do.
You've had 41 stays since March?
I'll show you my numbers. I think I've had probably had more than that. We'll see. Where'd you see that?
Go back to that other one. Not to interrupt, but
No, it's fine. Yeah. Oh no, I've had 41 reviews.
wow.
Yeah.
That's crazy.
Yeah, I've had way more than 41 stays.
Wow.
So I'll show you. All right. So so that's my bit about advertising. Definitely, guys, if you have any questions, again, you got the chat box at your disposal. The other big piece I want to talk about, so advertising is huge to optimize your income. Pricing is huge to optimize your income. Okay. And let me give you an idea here. We all understand that hotel rates, airplane rates, flight rates, they all vary, right? We know that it's probably more expensive to stay in a hotel on December 25th than it is to stay in a hotel on December 15th. We all know that weekends are probably more expensive than weekdays. Down here in Gulf Shores, there's always something going on, whether it's a shrimp festival or a hot air balloon festival or the hangout festival, all that. Well, okay, if there's an event, I don't really know what the shrimp festival is. I've never been here for a shrimp festival. I don't know if I'm going to come next time to the shrimp festival, but how do I affect, what should I do? How do I price that, right? If I price it too cheap, I leave money on the table. If I get too expensive and I don't get booked, then I don't make any money at all. So how do we solve that problem? Well, I highly recommend using a pricing software. The software that I use right now that I'll show you is called Price Labs. And let me pull it up. And they do something called dynamic pricing. So these are I actually own 5 short-term rentals, 4 of them on the beach, and then Lake Carroll is a house on a lake up in Carrollton, where I live in Carrollton, Georgia. And something I want to point out to you on this screen right here. So like, let's just take Blue Water right here. You can mouse over in this tool and it shows you, okay, for the next 7 days, my listing at Blue Water is 86% booked. That means there's 1 open day for the next 7 days. But the market up here is only 18% booked. So I'm way outperforming the market for the next 7 days. I'm outperforming the market for the next 30 days, and I'm outperforming the market for the next 90 days. So I'm at 62% occupancy, where the market's at 19% occupancy for the next 90 days. Now, my question to you is that a good thing or a bad thing? And you can answer that in the chat box. So I'm 62% booked going out the next 90 days, but the market's only 19% booked. What do we think about that? And if anybody's responding, I apologize. I can't find the chat box. Give me just a second.
So Carter said, could you pricing too low? And Rachel and Lori said good.
Okay. So what I would tell you is that if I'm outperforming the market that high, I need to know why I'm that high. Okay. So let me give you an example. Here at 16, C-Win 1603, 166. I'm crushing the market.
Mhm.
Well, I had a guy book, he just started staying a couple of weeks ago. He booked 61 days at my price. I gave him no discount. So it's about a $15,000 booking across 61 days. I'm thrilled to be 100% booked with that booking. Makes sense? Because I got my price, and it's across a slow season. 90 days right now, if you think about it, we're in the winter, we're in the off season here in Gulf Shores. So that's what February. So it's January to February, March, and April. I'm probably a little too high booked at Blue Water if we go out 90 days. I probably left some money on the table in March. March is kind of the beginning of the busy season down here. That's when college spring break starts. So I probably left some money on the table. I've since then corrected that, but with a dynamic pricing tool, let me show you how this works. So what I would do is I click review prices. And what it does is my base price is right now set at $300, but you can see here, so the gray days are days that are actually booked, and you can see the prices I got for those days, okay? The green days are days that are available, and this is what the system has priced out. And this talks to my software and automatically goes out to my Airbnb, my VRBO listings, my direct booking website. All I have to do, so if I want to change pricing, let's say I want to raise prices a little bit, I want to raise them, say 5%. I can go from 300 to 315, save and refresh. If you paid attention, you'll see that these prices that were what, $198 or $190 have now gone up a little bit for these open dates. I click sync now, and now I've raised prices 15% across everywhere. Okay. And then that's something that I would then go through here, because I do this from time to time. I would go back to Rank Breeze. Come on, computer, wake up. And which one did I change, guys? Blue Water. So I'll go down to my Blue Water listing. You can see here I'm on page 1 for 6 guests. Woohoo! High fives. I'll scroll down here and I'll go ahead and make a note of that. Track a change. And you can see here all these BPs, that's where I've changed my base prices. Okay. So now my base price is $315. I save that.
Some questions for you.
And now I've got a quick way to go through right here and see what changes I've done. And you can see as I've raised my base price, it's actually puts me up the search rankings. Because again, Airbnb, they know if someone's priced really, really cheap, people are going to find it and book it anyway. They'd rather market on the top page properties that pay them more money. Okay. And I'll find it. So let me pull up that chat box. All right. So let's see here. Amy said, when do I need to get my condo on the market now to book for March? Amy, I'll talk to you one off and we'll go through it. Okay. But I would recommend probably going ahead and getting those listings ready to go. Yeah. Does it ever work against you to raise the base price across all the dates? Well, I'm sure. So like if I raised it, if I raise my base price to $1,000 and now I'm trying to sell my condo for $2,000 a night, I mean, it'd be great, but I highly doubt it's going to book. And as a result, as people click on it and don't book it, that's what I think moves you down the Airbnb search rankings, because they know people have a short attention span. Every click is money to them. And if people click on it and don't book it, they start to assume there's something wrong with your listing. That's why it's so important, I think, to have really good pictures, really good write-ups, quick to respond to people when they ask a question, because Airbnb absolutely will penalize you and move you down the search rankings if you're constantly getting bombarded with questions or updates, or your listing looks good enough for people to click on. Let's be honest. If I saw a listing on Airbnb that was $2,000 or $10,000 a night, I'm probably going to click on it just to see what it is. But if it's just a 3-bedroom condo, I'm like, I'd never book that. And then I click off. Well, their algorithm's going to pick up on that pretty quick.
I think my question was related to that, but more so like, is there a way to change your base for the seasonal, for the high traffic times rather than just the day to day, rather than lifting the whole base up? Maybe you could outprice what you're doing, but only at specific times.
So good question. So let me show you it on this one. So yes, you can put seasonal times in here with different base rates. But the whole point of the dynamic pricing tool, so this is for Seawind. This is the one, you can see all these gray dates. That's that guy that's the 61-day booking or whatever it was. If I scroll right, so if I show you other months, you can see that the pricing's like, see, once I get to March, even with a base rate of $325, my pricing's going up to $500 a month plus a night here in March. We get out to, June and July, it's even more expensive. So the tool should be good enough to account for that and have your base rate right. Something that I've had to do because the beach, this market down here is so seasonal. I've had to really cut my rates in order to get bookings sometimes in November, December, January. And sometimes that rate is so low, even though this is a dynamic pricing tool, it's not dynamic enough. So I've had to put like a catch-all or like a minimum price for like that March to August date in order to protect those dates, because those are the money making dates. And again, I'm going to show you numbers here in a minute and you'll see that that's really where you make your money. But it would be very, very bad for someone to come in and book 2 or 3 weeks in June at $400 a night because I had my base price so low. If I'm trying to get bookings in January, you don't want to hurt your potential bookings in June. Okay.
Yeah, that pretty much addresses what I was trying to say. So there's ways to protect it, but when you change the base, you are changing everything. So you have to add another layer if you want to increase it for seasonal or protect yourself in the off season. Okay, cool.
That is correct. And like, for instance, on Blue Water, and then Carter, we'll get to yours. So under customizations over here, this is where you would do that. And guys, we could probably have a whole masterclass and mastermind around just pricing, because I've got all kinds of rules here. And let me show you kind of how that works. I'll hit on this and I'll hit on the customization, and then Carter will get to your information. So you can see here, this little moon with the number. This is also where we control the minimum stay or the number of nights someone can book. Okay. So here in January, because we're in January, I'm allowing 1-night bookings. Okay. But when I get out into like spring into April, it goes to a minimum of 3 nights during the week. And someone has to book 4 nights if they book during the weekend. Y'all see that? So all that is controlled with these customizations here, as far as the minimum stays that are allowed and how far out. So, I mean, the beauty with Price Labs is you can really be as sophisticated as you want to be. And I love that, because if you think about it, the people that we buy from every day, if I'm looking to book a flight on Southwest, I promise you, they know more about the demand and how many seats are available and how often people book and how far away they book to fly somewhere than I ever will, right? So they're going to beat me at that game every single time. The whole point of this tool is for you to be able to optimize and get the most money possible for the asset that you have available to book. Something I do, you can see here, these numbers, we'll probably have to lower it to get this to book. I mean, if someone wants to stay at my condo for $1,500 a night across the 4th of July, I'm happy to rent it to you for that. But that gives you an idea of just how much more demand the software expects for June 28th versus July 5th. Makes sense. That's just how busy that July 4th holiday is around here. Something else I want to show you real quick, and something else I love about this software. So Hangout Fest is always the 3rd weekend in May. I didn't know it was a thing until recently when I started owning property down here. Well, the software doesn't know that there's Hangout Fest this weekend. Okay, like the software doesn't know that. The software simply knows that there's more demand because there's less units available on this weekend. Because of that, it adjusts my price. And now guess what? I've raised my price across the Hangout Fest weekend because the software did it for me. Makes sense? So it's a really slick tool, really great way. This software, using a dynamic pricing software, is how I went from thinking, oh, owning a property at the beach is kind of fun, to holy cow, I've been missing this for a while. My biggest problem is I don't own 10 or 20 or 100 of these things right now. Like, that's the biggest problem that I have. So
Say it again.
say it for those that are maybe didn't catch that, they were messing around on Facebook. Yeah, exactly. This is, and you can see here, I've got a base rate in here of like an $800 minimum. Once we get in here, I'll take this off as we get closer. But the whole point of this $800 minimum starting in May and going through June and July was to protect my pricing, because my base rate's been as low as 200, or I think 210 a night, to be cheap enough to get bookings in November and December. Okay. So let's see here. I know we've got some questions. Let's see what we got. Carter, in order to get advice on how to price, are you also checking back with AirDNA? No, Carter, I do not like AirDNA's pricing tools. I don't like, I love that it's free and you can get some basic information from it, but I'm going to show you here in a minute why I don't like their numbers. And we're already at an hour, guys. So if y'all want to hang out with me, I'm definitely going to show you numbers. I apologize. It's just, we get talking and I get excited if you can't hear it in my voice, and it goes for a minute. But if I'm going to look at data like that, so built into Price Labs, let me go back here to the dashboard. Or no, I was right there. Dang it, clicked the wrong button. So say under Blue Water, you see here, I've got neighborhood data available here, and I can pull this up and it will actually show me once it loads. Give it a second. It's a lot of data it's crunching. It's thinking about it. Blue circle of death. There we go. Okay. So you can see here, the black line is the recommended price that we have on the unit. And then it also is giving me, okay, the gray is if you're in the 50th percentile of your market. So on July 25th, the 50th percent, the average price property in this market for the data in the area is $552. And I've got that filtered right here for 3-bedroom units, because this is a 3-bedroom unit. Okay. And then you've got right there 75th percentile, 90th percentile. I like this tool and this data a lot better than anything I've ever pulled out of AirDNA personally. So that's what I use for that. Let's see here. Get back to the chat box here. Donna, are all your listings automatically set up on the Price Labs site, or do you need a proper software like Zapier? No, it's all done. Price Labs talks directly. So I use a property management tool that I haven't even gotten to yet called Hostify. So my workflow or my flow chart is I set my price and my minimum stays in Price Labs. Price Labs then pushes that pricing to Hostify. Hostify then pushes my listing with that pricing to Airbnb, VRBO, Booking.com, and all of that. So anything I change on Price Labs goes to Hostify, then goes out. Anything I change on Hostify, like with my listing, like if I want to say, hey guys, in my description, the pool will be down for maintenance in the month of December, I change that in Hostify, and then that pushes out to the listings and the websites that are out there. So that's my hierarchy of how it sets up. Let's see. And that is a good segue. I'll just hit on this real quick, guys, and it'll also allow me to show you some numbers. Got one more question. How far ahead, days, weeks, months, do you typically see people booking to stay in Gulf Shores? Good question. I think I can pull a report for that for you. So the last thing, so I use 3 big tools to do this. I use Rank Breeze to check my advertising. I use Price Labs to set my minimum stays and my prices. And then I use Hostify. Now there's lots of property management softwares out there. I've never tried anything else. I've gotten used to Hostify because it was the first one I started with. Okay. So guys, this is live. These are my actual numbers here. This number right here is across the 5 listings that I have. But let's see, let me move that out of the way. So let me just show you a couple things in Hostify. This is what I use to manage the property. I love this calendar tool in Hostify because I can quickly see You know, you'll see when this loads up. So these are the people, the days they've booked. You can see here, the red is an Airbnb booking. Jeannie Daniel, this is a lady that booked directly with me. This is a direct booking. I can see what pricing I have, what availability I have. It's all right here on the multi-calendar tool. And then what I like about this multi-calendar tool is it's smart enough if someone books on Airbnb, the software recognizes it and then instantly goes out and blocks those dates out on VRBO and on my direct booking calendar and booking.com and all that kind of stuff. So the software is smart enough to make all the websites talk to each other. The other thing that the software does is it does all my auto messaging. And this is really the key to running this business and having it make money while you sleep. So I got 2 bookings today, actually, when I was in town. I haven't gotten a booking since we've started this meeting. I kind of hoped I would to show you how it would work. But if I get a booking sitting here talking to you guys, I don't have to remember to go back and talk to that person or say thanks for booking or anything like that. Under my automations, I have this tool right here called automated messages. And these are all the automated messages that I've set up for all my different listings that all go out at different times, go out when people are at the property, when people check out at the property. But I think the easiest way to see, and then something else I love about the software is this was my inbox, and this is for everything. I don't have to go to VRBO and respond to somebody, then go to Airbnb and respond to somebody else. All the messages come to one central mailbox that I keep up with for my short-term rental business. But I know this is my mother-in-law that stayed at our unit, and I know since she knew everything, she didn't reply, so I can just show you real quickly how this works. So my system, the way it works is as soon as I get a booking, this message goes out that says, thank you so much for booking with us. We're looking forward to welcoming you. Can you please send me your email address and phone number? The software is smart enough. If someone puts their email address in, it grabs it. So now I've got a list that I can automatically email everybody. Hey, we're open, last minute stay opportunity. You've stayed with us before, come stay again, something like that. And then there's just drips where we drip out the property address, rules, what to bring. We text the people the unit and the code and the Wi-Fi information at check-in time. So this is a text. You can see right here, SMS. This is a text that goes out to the customer. Something else that I do is when the day after someone checks in, I always send this message. Hi, Wendy. Hi, Reagan. Hi, Bob, whatever it is. I hope you've settled in all right, enjoying your stay. If there's any reason you can't give us a 5-star review thus far, please let us know so we can correct it. Please don't hesitate to reach out if we can assist you in any way. I think, so people actually think that I took my time to type that out and send that to them, which I didn't, the software did, but they don't know that. It also, I think it genuinely makes people feel bad if they do anything other than leave a 5-star review, because I've said, hey, let me fix it up front. So just to run a report here, let me show you. And then certainly we give them checkout instructions and we go back. And if you enjoyed your stay, I kindly ask that you leave a review. We always ask for reviews. We ask a couple times. And then I also send people to my direct booking website, which is Gulf Shores Orange Beach Condo. This is also ran through Hostify. So you don't have to create all that. All I had to do was buy the domain name, and you get a pretty, I'll pull it up for you. Pretty good looking, slick little direct booking site. All my condos are listed on it. You can click here and book directly. Okay. So let me run some reports and show you some numbers real quick. Let's see here, reporting. And we'll just do overview. So this is where I'm at year to date for 2023. Across my 5 listings. So let's do this. Let's look at last year's numbers. So we'll go January 1, 2022 to December 31st, 2022. Apply. All right. So real quick about my numbers, guys. So I've got, and again, you can set all this up in the software. So total revenue, these were the total deposits made in my bank account across the year for 5 listings. This owner revenue, because the software is a little clunky and no software is perfect, this is what guests actually paid. So this is the total gross amount paid. That includes the Airbnb fees, the cleaning fees, the taxes, all that. Obviously, the taxes don't get deposited in my bank account. The Airbnb fee doesn't get deposited in my bank account. So this is the deposits, okay? And this net revenue number, this is the number that I actually get to cover my expenses after I pay. So in our market in VRBO, I have to go in and actually pay the taxes. I'm the tax collector for Alabama. For Airbnb, they remit it, so I never see that money, but I certainly do have to pay my cleaner. I have to pay, I've built in the cleaning fees and I've built in the parking pass fees. So then this is the money I have left over to pay mortgages and, you know, spruce up the unit, do repairs, things like that. Last year across 5 properties, I had 282 reservations. Because we're talking about the beach, let me go ahead and strip the lake property out. That one's not real big, guys. That's more of just a personal property that my wife and I wanted to have. So we had a place to go ride jet skis and fish with the boys close to home. So let me filter that one out. So these are just the beach properties. So there you have it. Across 4 beach properties, 2 of them were actually purchased in March of last year. So there's some days and data missing. This is the net revenue after cleaning fees. It's a total of 256 reservations, an average review score of 4.96 for the reviews that we received. We got 44% of everybody that stayed reviewed. Everything I've read said that's pretty normal. You'll get about half. Reagan, you were asking, I was curious.
Reviews since March of last year.
For Belle Soleil. So let me just look at this is just Belle Soleil numbers. Since we bought that property end of March. We have had 59 reservations, and that was the revenue.
Wasn't that one of the ones that you said was a little bit harder to rent out because a lot of people are looking for the beach side?
My personal experience has been Belle Soleil doesn't rent out. So to give you an idea, the Seawind, the 1603, I bought that. It's not a fair comparison because 1603 was available for a week that Belle Soleil was not, and that happened to be spring break week, which is, you know, pretty popular. But Seawind, let's see here. It did better, right? So the number's better, few more reservations. And then let's see. I know there was a question about how far out do people book. I thought that number was in here. You can see here, 75% of my bookings at this one was Airbnb. Average booking days in advance. That was your question, right? So this unit didn't come online until April. So on average, people booked somewhere between 2 weeks and maybe a month out before they booked. What that goes to show you, and something I pay attention to, is if I don't have availability in the next 30 days, I'm too expensive or I'm too cheap. I'm sorry. So I want to have some availability on my calendar. So that's you know, that information here, average length of stay. That's something else that I see a lot down here. A lot of people are like, you know, we only book for 7 nights. You know, we book 7 to 7, Saturday to Saturday. That's great. We want all of our competition doing that because there's not as many people looking to do that. My average stay, even across July, my average stay was less than 5 nights. You see that? And then, guys, you can see these numbers, but to get it even more granular, I've got this spreadsheet that I do. I'm going to show you a good number and I'll show you a bad guy. Lori, no, none of my units allow pets. So, and I don't want to deal with dog hair and mess and things getting chewed up. If you're going to buy a unit, say like in Fort Morgan, that is more known for being pet friendly, you probably need to have a pet friendly unit down there. Gulf Shores is not, you don't allow pets on the beach. So I don't think you need to have a pet friendly unit, quite honestly. So I'll show you a bad month and a good month because it's always fun to talk about good months, but I'll show you both. So this is my reservations for the month of November. This is a report I run every month. And what I do is, so this is my cost, and this line right here for the different units, Bel Soleil, the mortgage, the HOA dues, and the power bill. The total, it cost me about $5,000 a month to own that property. Well, in November, now remember November's winter, you don't make as much money down here in the winter. In fact, you probably will not break even. So Bel Soleil actually lost $2,800 in November. Okay. My Lake Carroll property actually made money in November, but let's compare that to, so that's probably the worst month of the year down here in my experience. Let's compare it to July, which is the best month of the year down here in my experience. Okay, it still cost me about the same $5,000 to own the unit, but net to me after cleaning fees, parking passes, and all that was almost $13,000. Okay, Blue Water did $20,000 in July. Seawind 1603 was brand new. That one did 16, and then Seawind 1806 also did about 16. So you can see here, this is my gross profit number right here after paying mortgages and stuff like that. And across the 4 properties, there was almost $50,000 in profit. I know that's small. The sum's 49,000 and some change for the month of July. I love July. I wish it was July every month. But guys, I mean, again, these are just my numbers, and I'm going to tell you that I'm learning something new every day. I'm learning something new every month. I just started incorporating Rank Breeze several months ago when I learned about it. So inevitably, there's other tools out there. There's other ways to optimize these assets to make it work. And I appreciate everybody hanging out. I know we've gone a little bit late. Certainly, if you have any questions, I'll hang out and answer them. But it's certainly, I think there's big opportunity available still in this market. Some of these homes, obviously, I did buy in 2020 when rates were low and prices were lower, and anybody can look like a genius in real estate. You could have bought anything in 2020 and look brilliant. But to give you an idea, I did just put together, I'll show you one other thing that I put together. It's very, very, it doesn't look real pretty. Okay, let's just leave it at that. Come on now. Here we go. So there is a unit for sale in Seawind right now at Seawind 1302. It's listed for $699,000. I ran the numbers assuming you were going to do a 20% down investment loan. Assuming we finance at 7.125 rate, I've already ran the monthly payments and stuff right here. I did it based off my numbers. So my Seawind unit that rented out for the entire year last year did $93,000 in net income to me after, again, cleaning and all that kind of stuff. So and I assumed that the initial investment was the 20% down plus some closing costs plus some money. We always go through and update our units. I'm a big fan of having smart TVs in every bedroom and in the living room. We have nice linens. I try to make it somewhere where I would want to go stay. Okay. And what I've learned is there's a lot of people down here that run these units and they treat them like storage units, and it looks like it. Like when I bought Blue Water, we literally had 6 crock pots in the kitchen, like not 5, 6. No one needs 6 crock pots, but she just had a crock pot. No, I'll just put it in the condo. Well, great. She also wouldn't pay for upgraded internet. Don't understand that. She didn't have a K-Cup, a Keurig coffee machine. Guys, it's $100. We're way past $100 being like a reason to lose it. There are people who won't book because they want to use their K-Cup coffee machine. Put a K-Cup coffee machine in the $500,000 condo. So anyway, but so I'm assuming an initial cash outlay of about $163,000. Annual expense in today's market, not negotiating anything, just with the numbers I did before, means the unit's going to cash flow almost $30,000 a year. Good luck finding a long-term rental that's going to do $2,000, $2,500 a month in cash flow. That cash on cash returns about 17%. We have not even discussed the tax implications of owning these things. That can be another training later. And then you got to remember, these homes appreciate, right? Real estate goes up. We're just talking about managing and running the cash flow. So lots of opportunity in the market. All right, let's see what we got. Lori, you're welcome. Carter, have you put any extra layers to notify cleaners? So no, Carter, what my layers for cleaning is, again, cleaning we've certainly hired and fired several cleaners. What I've learned is I've built my system around what's best for my cleaner. Okay. So the cleaner that we have now, when I get a booking, the cleaner automatically gets an email saying, here's the unit, here's the dates to the book. So she adds it to her calendar. When the unit's ready, she texts us there's a text thread with me and my wife on it. And that triggers us to Venmo her the cleaning fee. And then we know, okay, the unit's ready. And, but that's really not a big problem if you have a good cleaner, the unit not being ready on time, and most people are pretty understanding. I mean, I say most people, yeah, there's complaints, there's issues that we deal with from time to time, but the amount of time we put into dealing with issues versus the numbers you've seen, it's well worth it. But as far as like having software, having something that alerts us and they go in, I've learned, I had one cleaner that used a software tool like that, and it was more headache than it was worth because she was bad at the software. She would click the wrong button. She would click that it was clean and be like, oh, I'm sorry, I clicked the wrong button. I meant to say that I was here, but it's not clean. So I'm now trying to call you, but then I missed her call. So I'm calling her and I'm interrupting. So you have to be careful with software and getting it too complicated. But that's my system now. Any other questions, guys? Well, I will hang out for a minute. Again, thank you, Reagan, and
thank you so
team
much
for putting it together. Thanks for the comments. Hope it was helpful. Again, my contact information, I guess I can flash that on the screen real quick. Let's see if I can get to it. I love when you click the wrong button on a piece of software. There we go.
It's mainly people already know you.
Yeah, most people know me. But like I said, you can call, give me a shout. This is my team number. It's set up for someone to pick up the phone. Also STR for Income, if y'all want to hop on there and give it a follow, that's a Facebook page that we've created. Don't spend a lot of time on it, but there are some videos on there, training, and you can ask questions there as well. Share it with people. But we're always looking to learn. If you come across a tool, we'd love to, that you think is helpful, we'd love to learn about it. And certainly if you need a mortgage or certainly if you need a real estate agent down here in this area, we've got you guys covered. But thanks for hanging out with us. And like I said, I'll hang on for a little bit longer and make sure all the questions get answered.